the Trump administration has talked about focusing on pushing down mortgage rates. Now, what we're talking about is mortgage rates follow the 10-year Treasury bond. Okay, depending on what the yield of that Treasury, that's what the mortgage rates will typically follow. They're very, very directly correlated. Okay, what is the 10-year Treasury bond, or what is a bond, anyways? Basically, the bond is the government's way of selling or raising money or selling debt to people, right, to pay government debts. I know that's confusing, right? So they have to raise money, they issue a bond. Debt purchasers, other countries, individuals, institutions, hedge funds, you name it, buy up that debt or lend money to the federal government, and they expect a rate of return on that purchase. So as our deficit continues to get worse, we're in the whole $36 trillion, investors that are buying up government debt expect a higher rate of return, not because of inflation, but because of the risk involved of buying that debt. The more out of control our budget is, and the bigger the deficit, the more money they're going to want. Doge, their main goal is to hit $1 trillion in savings and shrink the budget deficit as much as humanly possible. And by doing so, we may be able to actually allocate funds towards paying down our $36 trillion that we owe. But by bringing down the deficit and shrinking that difference between what we're spending and what the budget is allowing, it's actually going to improve the 10-year Treasury yield